trying to use your profit and loss to calculate your cash flow? And are you wondering, why does QuickBooks say I'm making so much on this rental property, yet I have no money in my bank account, or not nearly as much as I thought I should? I will show you how to calculate cash flow correctly using your profit and loss and a couple of other reports from QuickBooks. All right, let's get started. Okay, let's talk about when you're trying to understand where your cash flow is for your property and you're looking at your profit and loss and it's not making sense to you. So let's look at this. If your net income is $49,000 and you started with $1,000, you're going to say, well, then why isn't my bank balance now $50,500, right? Add, if my net income is this, add my beginning balance, that's where I should end up. I've had a lot of people ask me this, even very seasoned real estate investors and owners. So you cannot look at your profit and loss completely as a cash flow statement because it isn't. There are certain things that you pay for or money comes out of your bank account that do not end up on this report. And that's the key to anything. And I'll give you a couple ways to use this profit and loss kind of as a tool and then create a pseudo cash flow statement. So right here, we're showing 1 month of income, some expenses, and then we get a net income of $49,500, right? So this is obviously a demo file. It's kind of based on a commercial property and so forth. So you could have a small rental property. It doesn't really matter. But there are certain things that are not being accounted for, which you probably are paying out of this checking account for your property, but it's not showing up on this report, right? So I made a little spreadsheet here to show you. So in this instance, our bank balance began with 1.9, and we have this net income of 49, bringing us to the assumed bank balance of 1.97, right? But here is what the profit and loss does not include in your report. You have the $8,500 that you took out to support yourself, or you just pay yourself back. There was $10,000 against your principal. So when you make a mortgage payment, there's usually 3 parts. In real estate, there's never a law of anything, but usually you'll have your actual principal, right? You're going to have your interest, which is in the beginning a huge chunk. And then you're going to have your escrow transfer. Now the escrow, even when I'll show you another report, still doesn't show up. So the escrow is money that's technically yours, and we call it a balance sheet transfer. So in this case, this $3,000 leaves the Chase checking, and it goes into a bank account of your money that you have no control over. But we treat that escrow account as basically a regular bank account. And from there, when the bank does make your payments for your insurance or taxes, that is when those expenses will hit your profit and loss. So once you understand that these 3 things are affecting your bank balance, but they're not being accounted for on your profit and loss, then you can come up with ways to really see what is your cash flow and what to look for. Now, going back to the profit and loss, I'm going to just go back over here to the reports because there is one that helps you, but I'm going to show you a couple ways to look, because depending on the different types of expenses that they're not really expenses, they're balance sheet movement, right, will help you need to know about in order to figure out what your true cash flow is. Because one of my clients, they have they have to have a reserve account. So a certain amount of money is going to this reserve account all the time to, it's kind of like another escrow account, right? Ready for if some major repair has to happen. So that is, again, something that could affect your cash flow. Okay, so this is the report statement of cash flows, which is really helpful, but sometimes it doesn't show everything, and I'll show you why. Okay, so if we run the statement of cash flows, we see we have our net income, right? And here we have our beginning bank balance. And it does show the $8,500 draw, and it does show the change in the mortgage. What it doesn't show is the escrow transfer. And I'll tell you why. It may show it if I didn't have it set up as a bank account, but I do. I keep my escrow as a bank account. So it is considering what is your cash flow. So since the Chase bank account in this QuickBooks and the escrow is a bank account, that cash balance didn't change, right? Because they're the same thing. They're just two different quote unquote cash accounts. So it's things like this that could mess you up. Just like I was talking about if there's reserves, right? So if you had to keep a certain amount of money and take it out of your Chase checking and move it into a reserve account by order of your mortgage company or, whatever covenants you might have, that would be something that wouldn't show. Yet you just lost this $3,000. It could be $50,000 in available funds for operating. So I'll show you one thing you can do. Let me just move this over here and bigger to understand any other changes. Is you could run a balance sheet comparison. So I would do 1/1 to 1/31, and I would compare it to the previous period, and I would put in a dollar change. Okay. And from here, then you would spot that there's the $3,000 that changed in the escrow. And this is really simple explanation. Okay, so basically what you want to do if you're trying to understand, and it should work. So if you're out, then there's something you've missed, right? So you have your beginning bank balance. Now, in one of these for one of my clients, I did show all the rent and then the expenses and so forth. But basically what you're just trying to do is look at your net income, plug that here. Okay, so technically in your real estate investor mind, you should have, 1.970, but you don't. And this is where you go and figure this out. And I would use the statement of cash flows report and then a comparative balance sheet. So you would take away your draw, take away your principal for your mortgage, take away the escrow portion, right? And then you would have an ending cash balance of 1.949. And that's actually what we have, 1.949. And so you can see here, this 1921, that was my balances of December 31st. That's my starting point. So if you take this into consideration, it can really help you understand your cash flow. So another way you could do this, this is kind of fun, run your profit and loss for the month or year, whatever you're trying to do. So we'll say last month. And then what you can do, this is maybe easier for you to look at everything going on, is you could export this. I'm going to do a CSV because I'm going to throw it in a Google Sheet. Okay, so here's another way to do it. I have my net income, and this way you could just see everything. You could actually run this, month over month and insert the balance sheet amounts at the end. But so here's our net income. And then what you would want to do, I'm just going to go copy these pieces. And you could retype them. And then you would say ending bank balance, except you would have to do something, somewhere. Well, let me just do it like this. Okay, so then we have cash flow. We'll type in here cash flow. So we had the 49, take away the 21.5. So that's our cash flow, 28,000. Then you could proof it, because if you have something wrong, that's, you gotta not have that. So your beginning balance was, well, let me just make a formula, equals this, right? And then we could say positive cash flow would be your 28. Sum that up. Better match. 1.949,386.10. There we go. So those are some ways you can look at and try and even back of the envelope anything when you're really trying to understand cash flow. Just remember, you really have to get familiar with your balance sheet, your comparative balance sheet, your statement of cash flows, and your profit and loss. When will this not work? It won't work if you aren't tying out your escrow account every month. So let me just go over things you should do before you try and do this. Don't just try and do a bunch of bank transactions in your bank feed window, call it good, and try and do a cash flow. You can't do it that way. You cannot rush things, as I like to tell people. And there are a bunch of things you need to do beforehand. You need to reconcile your bank account. Okay. So you're going to reconcile the bank account, all of them, because all of that money movement, if you have any of it wrong, the worse off you are. So, and hopefully you're not, I don't know what you're going to do if you're doing one of those things where you're putting 10 or 15 properties into one QuickBooks to save money. Just disregard this whole thing. It's going to be a disaster because then you're moving money and your balance sheets never work anyway. So you're going to reconcile your bank account. You're going to reconcile your loan, right? That has to be reconciled. You need to reconcile your escrow account. These are things you should be doing monthly, but you cannot track cash flow or understand anything going on if you don't have those things reconciled. And when I say reconciled, I mean you're not clicking reconcile with 50 things still unclear, because that's not really reconciling. Everything is timed. So your principal balance of your mortgage matches your sheet, right? Your statement from your mortgage company. Make sure they give you your escrow. Some commercial mortgages, it's really hard to find the escrow. Sometimes you have to request it from the bank every month, but you should, because again, if you're not reconciling the escrow account, you don't know if they're paying the taxes, did they pay them, all of that. And then your profit and loss is not correct if you haven't correctly broken out that escrow account. And it doesn't go to an account called escrow as an expense. It's a true bank account. Remember, it's your money. So make sure when you're going to try my system of figuring out your cash flow, that you make sure you've already reconciled your bank, multiple banks, your credit cards, if you have one, your mortgage, and your escrow account. And then you could follow this system. All right, I hope you enjoyed this video. Please post any comments, videos you'd like. And if you need any help with your QuickBooks, I offer QuickBooks coaching. All right, have a great day.